What's going on, you guys? Welcome to another video by Real FX. On this video I'm gonna teaching you about breakout of structure. This video is gonna be taking you from not knowing anything about breakout of structure all the way to understanding fully what breakout of structure is and how you can easily label your breakout of structure correctly on your chart so that you can maximize your chances of making profits in the financial markets. And if that sounds like something that you're really interested in, stick around till the end of the video and don't forget to give this channel a thumbs up. Okay, now before we continue, guys, I'd like to encourage you to subscribe to the channel, to like the video, to share with some friends, as that really helps us grow. It really helps us reach many people, and that keeps us motivated to continue making more videos like this. Now let's talk about break out of structure, or BOS. Now, what is break out of structure? Well, break out of structure is when the market takes either a high or a low as a form of a trend continuation. The market does this to show that it's about to continue with its trend. And for you to fully understand this video, I'm going to be dividing it into two sections. The first section, we're going to be looking at textbook examples of break out of structure on both upward trend and downward trend. And then later, we're going to look at real chart examples of both upward trend and downward trend. Now let's look at some textbook examples. I'm going to start with a simple downward trend. So I'm going to go ahead and draw a simple downward trend. So this is what we expect when we talk about a downward trend. This is a downward trend, and we know that this is a downward trend because we are making lower lows and lower highs. So this is a lower low, this is also a lower low, a lower high, and a lower high. So I'm gonna go ahead and label this. That's our lower high, and this one is also our lower high, and this is our lower low, Now, when we talk about breakout of structure, we are talking about when in a downward trend, we expect the market to take out a lower low. And when the market takes out a lower low, we expect that to be a breakout of structure. We label that as a breakout of structure, and that is going to show us that the market is continuing with its trend. So in this case, when the market took out this lower low over here, this was our break out of structure. This was our break out of structure. So that is our break out of structure. And when the market came again and took out this lower low here, this was also our break out of structure. And if the market reverses like this, pushes back to the upside and then takes out this low here, this lower low here, that is also going to be a breakout of structure. So this is also a breakout of structure, and we can label that as a breakout of structure like this. And this over here, guys, is our lower high. We say it's a lower high because it's lower than the previous high. So this high over here is lower than this high over here, so this is also a lower high. And this here is a low, and this low over here is lower than this low over there, so this will become a lower low. So let's also label that. That becomes our lower low. Okay, now let's try to see how a breakout of structure would look like on an upward trend. So again, I'm gonna draw a simple upward trend like this. This is an upward trend, and how do we know that it's an upward trend? We are making higher highs and higher lows. Higher highs, this is a higher high, this is a higher high, it's a higher low, it's a higher low. And I'm gonna label them. This is a higher high, and this over here is gonna be a higher high also, and this is a higher low, this is a higher low, and this one over here is also a higher low. So we are saying this is a higher high because this high over here is higher than this previous high over here, and this low is a higher low because it's higher than this low over here. And again, here we can label our BOS. So our breakout of structure on an upward trend is going to be when a high gets taken out. As you can see, the market had a retracement here, and then it pushed to the upside. It took out this high over here. So this high over here was taken out, and this would be labeled as a breakout of structure. Once we take that level out, that level is our breakout of structure. And the same thing applies here. After the breakout of structure, the market had a retracement to the downside, and after that it shot to the upside, and then this high here was taken out, and this here would be labeled as our breakout of structure. That is our breakout of structure. So we're gonna label that as our breakout of structure. And if the market retraces again to the downside and then takes out this low, this high here that it has formed, that is also going to be labeled as a breakout of structure. So this over here will be a breakout of structure, and this would be our new low, higher low, and this would be our new higher high. Okay guys, here we have a real chart example on the Euro USD for our time frame. So we're gonna be taking a look at a downward trend, and here we have a high, and we also have a low, and we have a lower high, and we also have here a lower low, and again after this lower low, this market pushes to the upside, and we have a lower high, and we have a lower low, and we also have here a lower high. So I'm gonna go ahead and label this. That is a lower high, lower low, lower high, and lower low, and lower high, and lower low, and again lower high. And if you check here, we can label our breakout of structure. This is going to be our first breakout of structure here. That's going to be our breakout of structure. This over here is also going to be a breakout of structure. And this over here is also our breakout of structure. and this over here again is our breakout of structure. So each and every time when a low is taken out, or if we're in a downward trend, each and every time when a low is taken out, a lower low is taken out, that is our breakout of structure. And if the market continues, as you can see here, we have what? We have a lower low. Here's another lower low, and then this over here would be a lower high. This over here would be a lower high, and this would be our break out of structure. This would be our break out of structure. This would be our break out of structure. Let me label that. That would be our break out of structure. So how we trade using breakout of structure is that we wait for the market to reverse, and when it reverses to a significant zone, that's when we enter. For example, this market shot to the downside. The market shot to the downside like that, and then when it made a reversal like this one going to the upside, it traded off a significant area. In this case, that significant area where this was this level over here, this fair value gap over here. So the market traded off this fair value gap. Here the market traded off this fair value gap here, and guys, if you have no idea what fair value gap is, just leave a comment in the comment section, and I would gladly make a video about what a fair value gap is, or an FVG as they call it using ICT. So that's how you trade using a breakout of structure. As you can see here, we had a breakout of structure. The market shot to the downside, and waited for the market to retrace to the upside, and then when it retraces to the upside, it then shot to the downside. In this case, we traded off a what? An order block. Here, as you can see, we had an order block. Okay guys, now let's look at a breakout of structure example on an upward trend. This is gonna be very quick. Okay, now what you can see here is that we have a high here, and then we have a low, and then we have a higher high because this high is higher than that one, and then we have a higher low because this low is higher than this one, and also another higher high, again another higher low, and then another higher high, and then another higher low. So as you can see, this here is our breakout of structure. This is our breakout of structure here, and we have another breakout of structure here, and we have another breakout of structure here, and we have another breakout of structure here. So as you can see, when the market retraces, it makes an impulse, it retraces, it makes an impulse, it retraces, it makes an impulse, it continues breaking the structure to the upside, and then we can clearly say that the market is on a continuation. And as you can also see here, we had a high, a retracement, and impulse. So this becomes a higher high and a higher low, and then we have that impulse which takes out this high here, and when that is taken out, this becomes our break out of structure. The same thing here, we have this high, we have this low. This is a higher high, it's higher than the previous high. This is a higher low, it's higher than the previous low. And we have our break out of structure here. We have our break out of structure there.